Sir.
Get the latest weather, traffic, and news updates online at 560theanswer.com.
This hourly segment is brought to you by Scott Tucker Solutions and his show Retirement Decoded. Sunday mornings at 8. Learn more at scotttuckersolutions.com.
Now, from the Signature Bank Studios, this is Chicago's Morning Answer with Dan Proft and Amy Jacobson on AM 560. The Answer.
Top of the morning, Dan and Amy. The October jobs number is out, 12,000. Pretty anemic, especially when analysts expected 113,000. But, you know, you can't take these jobs reports with much more than a grain of salt because they're always revised, because it's driven by government, because the whole thing seems to be rather rigged by the Fed. Anyway, 12,000 jobs created in non-farm payrolls jobs in October. That's not too impressive. How concerned should we be? We start there with James Perry, founder, CIO of Perry International Capital Partners. Jim, thanks for joining us. Appreciate it.
Good morning, Dan. Thank you.
So, 12,000 non-farm payroll jobs.
12,000 new jobs in a country that's got 360,000 or 60 million people is not a good number.
No.
And the numbers, right? I mean, the numbers have been coming down and have been below trend really for the last couple of years. I think you have to put the jobs number in context, right? The jobs number, as you said, they're a little bit murky, and there's lots of different surveys that do the wrong things and don't collect the right data. But the point is that the U.S. economy is in a very, very fragile state, and most voters recognize that. I was in Europe, as you know, last month, and the biggest issue that came up was, who's Trump? What's going on with Trump? Who is this guy? You know, we're fearful of a reprisal from Putin in Europe, and we're preparing for nuclear war over here. And I was like, whoa, you guys, slow down, you know. So the fact is that they don't like Trump very much, maybe a little bit more in places like Zurich than Geneva, but they don't like him very much. And the reason is that they are afraid that the state will be dismantled, right? I mean, that's really what we're talking about here. Everything that we get in terms of data and market is very simple. It all starts out with government debt, Dan. You know, and total debt in the U.S. economy, you know, it's $36 trillion with a GDP that's, you know, sort of 28 or something, right? This is debt-fueled growth, which is absolutely unsustainable. And voters know that. The average household and the average small business is just getting hammered with higher prices that are sustained at these levels, which are 40%, 50% higher than they were 4 years ago.
Well, yeah, but what are the Europeans talking about? They don't know that. The reason their economies are sclerotic is because they've pursued high tax and high spend policies, and they continue to. I mean, they're even more government centric than we are. So what are they chiding us about?
Absolutely. I mean, the fact is France and Germany have so much public spending that they cannot grow. They can't even fire people, and businesses are closing. I was in Brussels, and the guy was one of my investor guys over there, he's big shot, said that Audi is closing an automobile manufacturing plant in Belgium. And I said, well, why? What's that all about? And he says, well, it's about EVs in China. I said, well, why don't you just throw some tariffs on them and tell them to knock it off? And they say, well, you know, France and Germany export a lot to China, so we can't do it. So Europe is stuck between China and the U.S., and I don't want to sound too critical, but they've really done this to themselves by just increasing all of this government spending, and they've crushed the free market economies, and there's no going back for them.
Well, and also these completely asinine anti-energy mandates. I mean, the story out this week from Germany is Volkswagen hitting the net zero wall. They're looking at potentially closing 3 vehicle factories and cutting 10,000 jobs. They haven't closed a factory in Germany in the company's 87-year history. So, hello.
Yeah, I mean, this is you would think that people in this country would look at Europe and recognize that for the last 30 years they've destroyed themselves, and maybe we should go a different direction. You cannot have a government that mandates what people are going to buy and sell. This is like the USSR, right? We're going to put our gas station here because my friend owns the property, but nobody drives here, so nobody buys the gas, right? It's the same thing. Nobody really wants an EV in this country. They're too expensive. They don't want the charging, and the recycling is expensive, and they're not even very green. So why is the government pushing an agenda on a free market capitalist system? Because it always fails.
Well, and we should look across the pond at merry old England, too, because as the Wall Street Journal opined yesterday, the bond vigilantes returned to London. The high tax, high spend budget from Britain's newly installed Labour Party and Sturmer. The response from the market on that, 10-year government bond rose as high as 4.57% compared to about 4.32% a couple of days earlier, its highest level in a year. Short yields also rose, and the sterling fell in value. So, I mean, they're doing this. They're continuing to do the same things the Biden-Harris administration did, which is to destroy the value of their currency.
Yeah, that's exactly right. And everybody on Wall Street and banking is looking at the UK, going, they're kind of hitting a wall here. And if we keep doing this, we're going to hit a wall too. I mean, what happened in England, even 18 months ago, they came out with a new budget when Tess was there. What was her name? She was the prime minister for about a month.
Yeah.
But they keep spending, and it's unfunded deficit spending. And the bond market just said, I'm sorry, you're not going to pay us back. We're not going to buy this debt. And they're doing it again. And they've hit a wall. And if the government here can understand that there are limits to how much debt you can actually incur and how much deficit spending you can actually throw at an economy that's basically floundering, there are consequences. And if we don't change direction here, this economy is going to collapse.
Well, just on the energy piece of it, too, if we could stick there for a second, a big energy. Coal consumption, this is according to the IEA, International Energy Administration. Coal consumption in 2030 now estimated to be 6% higher than a year ago. It amounts to adding the equivalent of the consumption of Japan, the world's fourth largest coal burner. By 2030, the IEA now believes coal consumption will remain higher than it was back in 2010. 2/3 of the total increase in energy demand in 2023 was met by fossil fuels. Again, the IEA, this and Bloomberg reporting this. So, as the West is kneecapping itself, China and the BRICS and the developing world are going where energy is the most abundant and the cheapest.
Yeah, it's called the market. It's like you buy the cheapest stuff you can to produce the most expensive stuff that you can sell so that you have profit margins in your economy for your businesses and your households, right? And somehow that message has been lost in Washington, for sure.
Now, this going back to the October job numbers, is President Trump or former President Trump, do you think he's going to be using this as to his advantage on the campaign trail or ignore it?
I think he's largely going to ignore it. I mean, I've been watching this as close as anybody, and the fact is that Trump really isn't talking about deficits or deficit spending at all because he knows he's kind of handcuffed when it comes to the mandatory entitlements that are already in the system. So I don't think he's really going to talk about it, except he'll say something like, "Oh boy, the economy's slowing down. Failed policies of Joe Biden." It'll be a talking point, right? So I think he's got a point, and he doesn't have to say much because everybody feels it. But if he's smart, and I think he is, I think that if he keeps hammering the economic story, I think he wins the election. One of the guys in Europe asked me a question. He said, who's going to win? Everybody wants to know who's going to win. I said, if this is about economics, Trump wins because, that middle portion of the economic spectrum, that sort of average household and small business, these voters recognize that inflation and crime are the two things that can put them out of business. And they can be addressed very easily. Quit spending and think about the rule of law a little bit every once in a while, right? So I think and that's economics. If economics is the story, Trump wins. If it's something other than that, because people don't care and they want the government to be bigger, then Harris will win. And I'm not sure which way it's going to go. The polls, I think, are leaning toward Trump, but you never know. These guys aren't really. These pollsters don't pick up the numbers as well as. I mean, they're as bad at picking up numbers as the government is, right? Because people don't answer questions.
Yeah, it varies across pollsters. But let's talk back about energy, and let's talk a little bit investment since this is your wheelhouse. What do you think about nuclear as a investment play, particularly the small scale modular nuclear power centers that are being developed with the incredible and increasing demand for energy from all these data centers for big tech companies as they're developing their AI products and so forth, against the backdrop of some of these backward-ass anti-growth energy policies coming out of states like California, New Jersey, New York, Illinois?
Nuclear power is coming. I mean, I was talking about the AI revolution. I do all the time, every day. And the fact is, think about where we were 20 years ago and 30 years ago with nuclear power, and then all of a sudden recognize that, Microsoft buys 3 Mile Island, right? And the government approves it immediately, right? For $1.5 trillion, right? So the tide has turned for sure. The small nuclear modular units that are coming to market, they're going to work. The trouble is that they can't be rolled out tomorrow. It's going to take some time. They're expensive. They are modular. But, I was reading this the other day. There's 88 different kind of patents out for these things, and we're not sure which one's going to work yet, right? So There's a lot of money going into all of them. It's kind of like the first laptop and mobile phone. You don't really know who the winner is going to be, so it's hard to invest in it. And the fact is, there's no income streams yet, and there probably won't be for 2 years, maybe.
What about like an ETF of these new companies?
There is an ETF in the nuclear power area. I don't have the ticker in front of it because I haven't bought it. I'm watching some of these things. Nano Nuclear Energy is a little stock that was about $9 a share 3 months ago. It went to 40, right?
Wow.
And now it's at 20. So it's still up almost, about 2.5%. But they have no earnings, so it's kind of speculative, to be honest with you. I like the idea of buying the sector. I think that's probably a good way to play it if you're an investor.
That's what I did. I guess I should disclose that. That's exactly what I did, which is why I'm asking you.
Yeah, I mean, I think it's coming, and I think people should own a portion of their portfolio in this sustainable and cheap and green power source because it's going to be a bigger portion of the whole pie, in 5 years by a lot.
Well, and you saw a story in the Journal this week about AI finally starting to produce some ROI for developers, right?
Right. Yeah. The AI theme and the AI industrial revolution sort of concept that we hear about every day, I'm a big proponent of it, and I think it's real. And I think that, in the stock market, these big hyperscalers are going to continue to take market share from other people. And I think that the incorporation of AI is going a lot faster than we think. And the growth numbers in terms of profits and profit margins are really the best sectors in the economy that you can buy. So I think one of the ways, if you're an index guy, the top 100 NASDAQ stocks, less financials, is an Invesco product called the QQQs, right?
Yeah.
And if you don't want to worry about overpaying for NVIDIA or worrying about Google in an antitrust suit or how many iPhones Apple is going to sell, the top 100 companies, and it's basically 70 of them are tech companies or 60. But again, we don't know who the winner is going to be, but there's a lot of companies out there that are really starting to make a lot of money. Dell's doing well, Oracle's doing well. These aren't Mag 7 companies, but they're making a lot of money. So I think the AI revolution is a requirement for every portfolio because the spending that's going on in that space, Dan, is just unbelievable. Slight tangent here. I'll just give you a quick story. Microsoft has a report out that said in 2023, the technology company spent $1.5 trillion on CapEx toward AI, right? And that's after tax, right? $1.5 trillion bucks. That's 5% of GDP, right?
Mm-hmm.
They also said in 5 years, that number is going to be 25% of GDP.
Wow.
So these guys are not afraid to spend, and they've got the government behind them. They are getting subsidies to do this stuff, right? So, again, what's it all worth right now? I don't know. Is Apple supposed to be $220 a share or $330 or $130? It's hard to say. But in 10 years, some of these big cap Mag 7 type stocks are going to continue to grab market share from the rest of the economy because AI is really not about revenues for the accounting firm and the audit firm and the legal firm and the education department and coders. It's really about all of these companies, small and large, using AI to cut costs so their profit margins are going up. And they are buying into the AI platforms that the megascalers have. So your profits are going to gravitate toward the big guys rather than the small guys, but the small guys' profit margins are going to go up because their costs are going to go down. So I think that's a pretty good macro overlay for the AI industrial revolution, and I think it's going to work.
The election, I mean, the betting markets have Trump just about a 2-1 favorite, last I checked. What happens if Kamala wins? What would the market reaction be?
The stock market will go down because interest rates will go up. Everything is driven by interest rates, right? You got a 10-year note right now trading at 4.26. It was 4.35 or so the other day. It's really about the bond vigilantes coming out and saying, hold on a second. The government brought in $5 trillion last year and spent $7 trillion. That's why we have a deficit of $2 trillion. And they want to bring spending up higher to $8 trillion. And they're not going to have enough revenue to cover the shortfall. And the fact is that the bond market has to finance that deficit, right? So if Kamala Harris wins, you can expect the same policies under Biden to be extended and also expanded, right? So interest rates go up, and that means that the value of underlying assets that those rate structures support go down. So I'm very bearish on the stock market if Trump does not win.
James Perry, founder, CIO, Perry International Capital Partners. Jim, thank you as always.
Dan, thank you. Have a good weekend. Thank you, Amy.
Thank you. And he joined us on our turnkey.pro answer line.
It's like a hot, steaming cup of information to start your day. It's Chicago's Morning Answer on AM 560. The Answer.
The following is a paid political announcement.
Family, country, community. Ed Soliday has spent his life in service to others. A graduate of Valparaiso High School, Ed Soliday went on to attend Indiana University and served our country in the Army, where he earned the Distinguished Flying Cross, 2 Bronze Stars, and a Purple Heart. After his military service, Ed Soliday built a successful career as a pilot and flight safety expert, leading crisis management at United Airlines on 9/11. Now, Ed Soliday is serving us at the Indiana State House, where he puts people ahead of partisanship. Representative Ed Soliday is a respected voice working to protect taxpayers, secure our energy grid, and attract better-paying jobs to the